still offline.
You better take them out to establish the connection.
Is the encoder? So yeah, there you go.
Hello guys, can everyone hear me? Everything going well? Everything going smooth? Just want to check we're all back up and running. Good. Looks like we are live. So let's just carry on from where we left off and a little bit more of a discussion regarding the coin market cap I was just getting into. Now, regarding the flippening, just going back a little bit so you guys haven't missed anything whatsoever, we are at one of the most exciting times in the cryptocurrency market right now. And regardless of what I'm going to be showing you from a technical outlook moving forward very soon and covering the market from a full top-down analysis, I'm going to be covering the charts from scratch, exactly how I would do so. We'll be doing XRP and BTC, and I may even be pushing this forward onto the likes of Ether and Litecoin as well if we do have enough time. But for the time being, just wanted to say, no matter what happens in the market right now, no matter what we are looking at from a technical perspective, even if it's a short-term downside push, no matter what happens from here onwards, we are looking at one of the final low prices the market is going to see before we see the next parabolic bull run moving forward. Now, this is something I've covered for a few weeks and a few months now, and we've been fairly smooth in line with the market for the majority of the year. The past, let's just say, going back to the platform, again, looking at this candle now, it's screaming bullish. But once I actually break this down for you, it may actually entirely shift your perspective. So whilst the majority of people are going crazy right now and they're looking at all of this stuff and they're thinking, whoa, what's going to happen next? What's going on over here? Let me just show you in very simple terms why, after a bit of top-down analysis, you can start to understand why things may be a little bit different than what they actually seem. Now, looking at the overall grand scheme of things here, and the reason why by the end of the year, I do believe BTC should be back at $16,000. Now, this has been a projection I gave around 1 or 2 months ago, and to be honest with you, I do truly believe all it's going to take is one final breakout now from a certain key level, and we are going to absolutely rocket higher. So looking at it from this level, looking at from where we are right now in particular, let me just get this open. Let me just see what's going on over here. Whip up this with a nice color as well. Get rid of this to keep it nice and simple. In short terms, guys, when it comes to top-down analysis, personally, not many cryptocurrencies have been around long enough to actually sustain a monthly candle chart. But with BTC in particular and the likes of XRP and many others, it is a little bit easier to actually break. Okay guys, up and running once again. Everything good? Please let me know if everything's all good. Perfect. So we've been having some issues, sorry about that. We'll get that resolved ASAP and make up for it with even more chart time. So we're back live, let's go. Moving on and starting from the monthly chart for BTC.
Yeah, well, it's the entire screen. No? Show full screen.
Boom. Working? Right, click the page story quickly. Just wait, let me see the stream and then we'll give the clearance. Yeah, it worked. Alright, just apologise to everybody on behalf of kind of like us.
Yep. Guys, just an apologies on behalf of the Wizard team for what's been going on. Again, one of the first times ever doing a webinar with all of you, just getting up and running with this ourselves. But regardless, can you all hear me? Just double checking. Want to hear some feedback in those comments over there because we still have a lot to get through, guys. So let's get ready, let's get prepared. Got your drinks ready, got your snacks ready, refreshments, whatever it makes to be. There is a lot of you in this chat right now. My goodness, this is looking good. This is exciting. Let's get started. Right, good. Monthly chart, BTC top-down analysis. What am I looking at right now? What is going on? Let's have a look at both angles here, put this all together, and then we can construct a final overall outlook for the remainder of 2019, moving into 2020. All good? Okay, just checking everyone, just checking. Right, moving forward now, BTC. This is the first thing I want to cover. And looking at the monthly perspective allows you to filter out the noise of what everyone else is looking at right now. So as you can see, the screen is not moving right now, guys. Again, this is here. You will see some movement very soon, as long as you can hear me. For now, I'm just talking whilst we construct these charts all together. So as we move forward, there you go. You can see the chart moving as it's just shown up on your screen. Good. Now, guys, when it comes to a top-down analysis perspective and actually zooming out from a monthly time frame, what you should be looking at here is the possibility of what you can see, what the majority cannot see. So the majority of people, whether that's a analyst on Twitter or even a retail trader, the majority of people do not look beyond the daily time frame. And this is one of the biggest issues when it comes to actually understanding charts and understanding analysis. You cannot use cryptocurrency, a highly volatile asset and a highly volatile market, with intraday timeframes only, because it's so messy. There is such an infrequent period and an infrequent burst of volatility to volatility. It's not a very good idea to be looking on a lower time frame perspective. So let's look at BTC overall. And when it comes from longer term, what we should be looking at is the future. Now, I've said this regardless of what is happening right now on an intraday or a very short-term perspective, whether we go down to $6,000 or not, what is happening on a much larger scale here? The market is growing. Many people are not understanding this. Many people cannot see that no matter what is going on right now, from a longer term perspective, from 2013 onwards, we've been progressively moving higher. And that means the higher lows have already been forming. And yes, we have lower highs. Is that a negative thing? Is that a problem? Is there a problem? Absolutely not. This is a very good sign, and I'm going to be breaking all of this down very soon as well. But as you can see, from a more of a linear scale and organic growth, there has been a trend line of some sorts forming on the monthly time frame. So we've been progressively growing, very organic. We saw the initial breakout that caused the obvious bull run of 2019 after breaking out from this formation here. As you can see, this is all looking pretty good, and this is one of the biggest catalysts behind why the market broke out. And this is how I actually do the majority of my trading. It does not have to be complicated. It can be very simple, and that's the purpose of this webinar and the purpose of everything I do. There's so much confusion out there, indicators, this, all these algos. It doesn't matter. Technical analysis in its purest form will always succeed in the long term. So let's have a look at this. This is one of the first things that really caused the breakout for me. It was this trend line over here on a monthly perspective. Now, we're highly unlikely ever going to come back down and retest this, because if we do, we would end up within a sub-zero level, and that's obviously not possible or not going to happen. Now, pushing that aside, let's focus on the longer term picture here. So we're overall growing, and we know within the end of this year there should be some form of very large movement. Now, this won't exactly be a bull run, so to speak, in terms of the parabolic bull run we saw during 2017. This will be the initial phases. I believe the end of 2019 we should be seeing BTC at around $16,000. $15,000, $16,000 I believe is a very promising level, and there is so much positivity for this level coming through that we need to actually start applying some focus on this. So I just wanted to say, no matter what I am going to be covering moving forward, no matter what's going on, BTC, we are anticipating a very large movement as we progress even further. So having a look at this right now, we've got the trend line here, we've got the higher lows forming, we've got some form of downside movement present as well. So what we would do in this particular scenario is start plotting the first key levels of interest that come to mind, and the first things that you see that evolve around the current price action. So having a little look at this, and again, just want to mention as well, guys, this webinar will be ending in exactly 1 hour's time, just so you all know. And what will be happening from 10 p.m. onwards, the demo, the Wizard platform demo, will be going live. I completely forgot to mention the times, so just throwing it out there. If you stay tuned to the end of this, I do not need to show you the platform anymore. You guys can jump in and do what you want. The platform is yours to roam free for a very limited period of time. Just be careful, because the platform will self-implode and self-destruct. So just make sure you're there as quick as possible. 10 p.m. UK time, just make sure you are ready. So back to the charts. We want to be focusing, although historical price action is obviously critical, you want to be focusing more on the present price action, because prior price action, the market dynamics could have been very different during these points in time. Price action here and the actual volatility in the market dynamics differ massively to the price action we've seen here. So even if a level of support and resistance is critical and it looks very strong, the price action at this level could have been very different to how the market's reacting now. So focusing on the closer to home price action is always the easiest methodology to actually do this. So having a look at this monthly, the first thing that obviously ticks the head right here is this crucial level where multiple rejections have occurred on a monthly level, 2 candle closures at $11,000, and I'm very proud to have called this reversal from around $13,800 to $14,000 down to the initial $10,000 region. If you've been following me for a long time, even when this market kept going higher and just progressing its way, everybody thought, you could have seen the tweets for the first half of 2019, we had to deal with a lot of backlash and a lot of people saying the bull run's coming, this is next, this is next, this is next. But guess what happened? With a bit of patience and an understanding of key monthly levels, I'll show you exactly how I preempted the reversal from 14,000 down to 8,500. And if you've been following me, you will know 8K and 6K has been on my radar for literally the majority of the year. And the way I actually preempted that $14,000 reversal is easy as this. And this is, I promise you, it's as easy as this. 2 monthly candle closures here aligned with a round number of $14,000. We saw the entire bull run of 2017 come to a crashing halt from this exact level. Because if you looked on the daily, and you go back to 2017, you look at all of this mess over here and you think, oh my goodness, what's going on? How do I decipher what's going on next? What's going to happen? If you actually just switched over to the monthly perspective over here, looked exactly where 2 monthly candles in a row. First of all, we saw the closure here and we saw the opening here. Exactly at this level, we saw the pullback, $14,000. All I've done was get this, mark this off exactly there, push it up a little bit towards that $14,000 zone, and just like that, I predicted a reversal from $14,000. I'm not here to sell a dream. I'm not here to show that it's rocket science. I'm here to show you by applying very simple methods that the majority fail to actually understand. The simpler it is to actually analyze, the easier and more, I guess you could say, the higher the probability is of this call actually coming through or your analysis coming through. So here we go over here. We've just seen this melted rejection, falled back lower. We are now below the $11,000 region. Here is why I still believe there is a lot of room available to the downside for BTC. So the first region of interest to actually mention is of course the $8,000 region. Psychological level, very, very interesting. A lot of people have been waiting for this level for a very long time. Not to mention, we had the CME futures gap. Once we actually broke through this $8,000 region, there was a huge gap on the CME futures chart around the $8,500 region. So we knew regardless, before BACT actually went live, there was going to be some form of institutional manipulation to fulfill the $8,500 gap. So when you put all of that into perspective, it was very easy to understand that the momentum we saw for the first half of the year was very short-lived, and we understood that moving forward for the remainder of 2019, it was going to be bearish or some form of consolidation. Now, let me just show you first of all the potentiality for an upside breakout, and then I'll go into actually what I believe straight after. So the first thing to focus on is we are progressing higher on a longer term scale. Even if we fell, you have to look at this longer term perspective. If we hit $5,000, we would still be closing the year of 2020 higher than the prior year. And this is the grand scheme of things that many people fail to understand. After breaking through higher, even if we fell all the way down to here, it would still be more promising than the year before, which means there's organic and progressive growth, which means moving forward, you're more likely to follow the same pattern. Now, the same way that this broke out, very roughly from this region here, trend line broke, we never saw a retest. If you go over to what's happening right now and just mirror this almost precisely. If you do not want to go off a wick by wick basis, which by all means we definitely can, I'll be getting into that in a second as well, you can see just by even mirroring the exact same trend line from here, we have another pattern forming almost identical from similar regions. And the only thing that's really keeping me within these boundaries of the market, I'm going to show you in a second. But looking from a more promising aspect of an upside breakout, all we need to do, guys, realistically is break around $10,200 to $10,400, and we basically have a confirmation that the next leg higher and the parabolic growth will continue. So for the end of 2019, before we get to our potential downside threats and downside targets, I do believe we'll be breaching through the $10,000 to $11,000 region by the end of the year, pushing towards the likes of $15,000, $16,000, where that will not even be the parabolic growth. That will just be the organic steady growth caused by FOMO and speculation before the real momentum kicks in. And this is where the likes of CME options comes into play, the likes of backed options coming into play Q1 2020, the amount of liquidity that is going to be, influxed into this market is phenomenal. And the way I can kind of explain that right now is just by showing you some of these articles very quickly. Now, the quickest way to explain this, ready or not, in the US, China prepares for blockchain-based digital economy, introducing new cryptography laws. So that's the first thing we can just throw out there off the bat. I do not need to go into detail. All you know is there's trade wars with China going on right now, and it seems their biggest priority is actually tackling the cryptocurrency sector from what I believe is an opportunity to get ahead. Why argue and quarrel over an existing monetary system and an existing trade war when you could actually be the early adopter and the first one to get ahead of an entirely new space, and you've completely beaten your competitors? And this is where the next article comes into play. Let's just find this. It was the Coinbase CEO who highlights his surprise, disappointed at pushback faced by Libra. So what the article states is the United States financial services industry does not feel innovated, according to Brian Armstrong, who's the CEO of Coinbase. He thinks that the US should embrace anybody who's trying to innovate this area, even if they don't like the company that it comes from. So that obviously echoes the whole theory of, Project Libra and Mark Zuckerberg. There is a bit of a conflict with the US and cryptocurrencies right now, because we have 50%, striving and fighting and openly admitting it may be a threat to the monetary system, but it at least has some form of promising aspects for the future of how society functions. So you can see what's going on here, and you can see why China have raced and gone straight for the pole position of actually dominating the cryptocurrency sector. The same went for Russia, and China have been involved since 2016, 2017 predominantly anyway. You may remember 2017, the threats to ban crypto, the hackings, the reports, the scandals, the scams, all the stuff that was going on predominantly evolved around China, just shows they have a very significant stake within this market. So when you put all of that together, and you look at the likes of MoneyGram, we've got the Swell Conference in a few days as well, not to forget October the 1st to 2nd, Swell Conference. Will this affect XRP? Let's find out very soon. But first of all, let's cover this as well. MoneyGram, they're pushing to launch Ripple's XRP-powered cross-border payments platform worldwide. Now, the payment platform has obviously changed name. It's now called On-Demand Liquidity, the XRP-powered payment solution. As you know, it was formerly known as XRapid, now known as ODL. So what essentially is going on over here, Brad Garlinghouse said that he got a call from the CEO of MoneyGram 2 weeks ago, and he's upset with us because we're not moving fast enough. That was an unbelievable call. So the first thing I'm going to do is just getting back to this chart. The first things first, looking at this chart, guys, and then putting all of these pieces together, what are we gathering from this information? We are gathering right now there is an influx, there is a need, there is a desire, and there is an urge to be involved within the cryptocurrency sector. We are long gone from the days where this is just a speculative asset. Now, although the monetary aspects in terms of the charts, they are very heavily related to speculation. That is what is actually causing the market to shift right now. But when you're looking at it on a longer term perspective, when you're looking at what's going on from the very core, Ripple are being forced by MoneyGram to expand, to go further, to go global. You've got the CEO of Coinbase. He is literally saying that America are not doing enough to adopt this technology. You've got him even admitting that although Mark Zuckerberg and Project Libra may not have the best intentions, it would have done a world of good for this space. And I absolutely agree with all of that as well. I absolutely agree that right now there couldn't be a better time to be involved in the market. And that's why, despite any form of technical analysis that I've been giving, I've been telling all of you from the offset that you cannot really take the risk of not buying around these reasons. I'm talking anywhere around these regions, especially for XRP as well. Where XRP is right now in comparison to where it was at its all-time highs, I mean, guys, it is giving a bit of a warning sign that we are in store for something fairly magnificent very soon. To look at where XRP is right now, again, the trade's working perfectly in our favor as well. Again, further aiding what may potentially be a very shocking reversal coming soon. But we're going to get to that aspect in a second as well, but when we actually start breaking down the charts properly. But all you should know is when you go to the monthly chart and you look at where XRP once was, and you look at where it is right now, it's a no-brainer to be purchasing altcoins at these prices. Ether, going over to Ether. I bought Ether around $6, I believe it was, to be honest with you. Sold the majority of it around 400, then let the rest of it go around 1200. Now look at where Ether is at this exact region, getting rid of the volumes. We were once at $1,400, now we're sitting at around $176. These are Black Friday discounts that we did not deserve, but we've been blessed with. So it would be incredibly unwise to not be capturing these opportunities in time right now. And that is just me listing the top 4 that we actually look at. If you actually go to the other altcoins as well, there are all kinds of crazy and favorable opportunities in the market right now. And one of the more exciting ones, Litecoin, which I'll try and get to a bit later on as well, is actually looking like one of the more promising altcoins out there right now in terms of a technical level. If you're looking at where these current price points are situated in terms of support and resistance, Litecoin could be one of the first ones to actually break out, and we'll be getting into that in a second as well. But first of all, going down and breaking BTC down from top-down analysis to the overall concepts of what can be going on an intraday level as well. So let's just get rid of this for now. You've seen that theory, you see what's going on. Here is why I'm currently looking at a bit more of a downside favored bias before we actually see the explosion by the end of the year. Looking at this right now, although the higher lows are forming, the lower highs are also forming. And this means we have a key region to mark out straight away. And that means whether you want to go from wick to wick or from wick to body, that's down to you. But this is obviously very threatening. There's no real threat until we start breaking from this trend line over here. But if you do drag this down to here, it's a very considerable region to take into mind as well. So leaving all of this here, let's mark that out. You can see we are getting to a boiling point and a squeezing point. And what normally happens during these procedures in the market is when you get closer to a breaking point, you're likely going to see a breakout. You've got the overall longer term picture focusing on the upside, and then you've got a counter trend line technically forming to some extent. You break above, you see a retest, and boom, we start rocketing. So the first thing we should probably do is actually just mark out our end of year target around the $16,000 region. And what we'll do for this, again, nothing but positive vibes. Naldo in the Wizard family, positive vibes to all of you, the Wizard family. Wish all of you positive vibes and a very prosperous end to 2019. I'll just throw that out there from now. Now, looking at the, make that purple just to give us a nice little end of year target. Very good to see, very good to see. What happens from here, guys, and what am I looking at right now? The first thing to look at is all of these wicks over here, and a bit of a strategy and a theory that I use to decipher how the market could be moving from here onwards. Now, look at this. One lower wick, one lower wick, one lower wick, one lower wick, another lower wick. The wicks are literally descending every single month. We are descending lower, which means we are inevitably going to be breaking out at some point, but we may have a lot more downside in store, a very surprising downside in store. Looking at this, this is my best way to explain how to do this. Now imagine this exact purple level here is where all of the institutional sell orders are located. Now imagine all of the bulls are trying to breach this region, but what happens if the selling pressure gets stronger? That means the bulls, who would be located here, let's make this green to indicate the bulls. You've got buying pressure here, you've got selling pressure here. Now what's happening is when this buying pressure is tackling this region but failing to break higher, the bulls are essentially weakening, they're losing momentum. So where they once had power up at this level, they're now lowering down to this level. The bears have pushed them lower. It's essentially a game of tug of war, and they're battling back and forth. From a visual perspective, you can see the bears have pushed the bulls lower again. They've pushed them lower again, and they've continuously done so even lower until BTC went all the way back down. Again, the war just bullying them. The bulls are being bullied back into submission and back below $11,000. And that is the easiest way to explain what's going on right now. Candle closures here. After breaking through, the wick then came down, rejected this broken support, turned resistance, and then bang, we've gone lower again, still falling within the means of lower highs and also descending wicks. This is something you should really be putting into perspective right now. looking at the downside perspective. Now, why is $6,000 such a big region of interest for myself? Why have I always been mentioning $6,000? Well, first of all, going on to the weekly over here, or the monthly even, let's just do the monthly, you can see a very clear setup for a head and shoulders. You've got the shoulders, you've got the head, and you've got the potential shoulders within this region, which means with one final pullback, we could be seeing that touch over here, maybe even a tap of the trend line before we actually get to this boiling point. Now remember, as we slowly progress down, 2020 comes exactly at this point in time here, which means by the end of 2020, we could be seeing a very sharp movement down one last time before boom exploding. And when we actually get to the breakout, I'll be covering how to strategize exactly that as well. Because once we actually break from this trend line over here, we'll be looking at long opportunities and we'll be riding one of the biggest movements the market has arguably ever seen. So everything I'm telling you on a short-term perspective is what is very likely going to happen before the actual breakout. So regardless of any margin trades, I'm buying here regardless. My physical cryptocurrency buys are being stocked up around these regions. Not necessarily BTC. I feel like it's a little bit too pricey for the average person. Now, whether you are wealthy or not, buying $9,000 or $10,000 for a single unit of a Bitcoin is still very expensive in my eyes. Now, unless you are investing millions and millions into this asset, it's not necessarily as profitable as simply buying XRP, Ether, or LTC. I would much rather buy Ether at $176 than buy BTC at this current price point. I do not care if it's the leader, if it's the so-called throne holder or the king. In reality, it's still very expensive and it's not as profitable as many other alternatives. But because the dominance is high, we have to still follow what this little cheeky devil is doing. So let's follow this right now and drop down to the weekly. So hopefully you can see now, dropping down to the weekly, we've got the head and shoulders forming and showing a much clearer setup for what's going on. We can now see by adjusting this trend line ever so slightly over to this region over here, you can see there's a nice crossing point yet again. And regardless of what's going on, we are progressively moving higher and lower. And when I actually start stripping away these key levels for all of you now and breaking this down in an even clearer manner to understand, here's what you're going to start seeing. So let's just drag this and leave that there. Let's get rid of this even. We do not need this anymore. We do not even need this. We understand the end of year target is here. And the only way we're going to achieve that end of year target is upon a breakout. Now, once we've set up our key levels yet again, on a cleaner perspective, I'm going to show you exactly what we'll be looking at from a breakout, a pullback, and a potential blow towards that region. But for now, looking at what's going on, here is why when even I've been a bit confused. I'll completely admit myself, I was a bit more confused over the market over the past week or two. It's been a bit complex, it's been a bit confusing, and it hasn't been moving in the similar manner that it normally does. But for now, it's actually following exactly what's going on. So here's what I'm going to show you, and here's what makes sense to me. What we have done, we've broken through a very critical level of support. Now this level is around 9,600. I can even drag that down, 9,500 up to around $10,000. It's a very wide zone. And you may remember when we first caught this short, if you guys were with me, we caught this short from $10,800 and we rode it the entire way down to the $8,000 and sub $8,000 regions. This was one of the greatest trades we actually captured this year. It was almost pinpoint on the $10,800 region, and we've seen that break through. Now, whilst many people were anticipating the bull run to occur from here, I had to use a little bit of logic in this scenario, to be honest with you. And just, again, you may notice I do not follow what other analysts say. I do not follow what is said on Twitter. I follow my own path, and that is how we've managed to remain ahead of the majority for the entire year. Now, whilst we have over a 95% hit rate, many people can and do tend to fall into a trap of just continuously losing because they're chasing other people's trades, other people's setups. They're trying to prove people wrong. They want to, let the ego get in the way. That's not what it's about over here. It's not what's needed. And again, Kenzie Cooper turning 70 to a $700 account off that single movement just goes to show with a little bit of patience and by actually focusing on these higher time frames, you can achieve incredible things in this market. So looking at this right now, after we saw the pullback lower, the first thing that I did call before shifting bias was a pullback, first of all, to around $9,400 up to $9,600. The reason being is crucial level of support since June 2019. And after breaking this level with so much force, it was inevitable that we were going to see a retest of some sorts. It's simply just a retest. It's nothing to really, be scared about. It's nothing to really get too excited about either. Because from a longer term zoom out and a longer term outlook, you've broken through support, you've come back to reject, but overall, in the grand scheme of things, even on a weekly perspective, if you just focus on this current price action from here, we're moving lower. We've actually pulled lower, hit the trend line again, and we've just rejected a broken support term resistance. So here's what we'll do. We'll get the Fibonacci up, very crucial thing to analyze. I'll even mark it from there because that's a bit more realistic. But even if I drag it down to there, you can see that the extensions, first of all, align almost exactly with $6,000 and $5,000. Now look at where that aligns. That aligns with the trend line down there, and $6,000 is obviously in line with our overall inverse or overall just head and shoulders setup. This is exactly what's going on over here. So looking at all of that as well, dropping down to the daily, what's going on in the daily. Look at that manipulation, guys. Now this is a sign that there should be a lot more downside to follow in some form of surprise movement, because when you see a sudden surge in capital and you see the price react and then bounce from a very specific level like a trend line or a key zone, that is a key indicator of market manipulation and a key sign that the market has been driven by institutions to a predetermined level before we start progressing and inevitably falling or rising towards our next target. The market is not currently controlled by us, the people. It's controlled by institutions, the banks and governments. We're in a heavy speculative market which has not got the volatility and the liquidity that other markets have. So that means when these institutions are getting involved, they have the free will and the power to do whatever they want with the price. That is exactly what's going on right now. So looking at this, and the reason why I was still calling for shorts, the reason we didn't enter here was because we have to wait candle closures, and there was a potential wick fishing up to 8.8, but my goodness, did we annihilate that. And this is why it's so crucial to be patient, because when you go over to the 4-hour time frame right now, here is why shorts are looking magnificent. And if not, even for a short-term movement over here, we can see a pullback towards the likes of $8,000 once again before we even consider what could be occurring next. So looking at this trend line breakout, and after seeing the manipulative movement here, we probably have missed the boat a little bit with BTC, to be honest with you, but we've already executed the XRP short. And this is why I actually use them in confluence with each other, because if you notice, no matter how much BTC exploded yesterday, it went straight to a key level. We actually came back, rejected. Although the wicks were up there, guys, you can actually see the candle closures themselves were perfectly aligned with prior support, now turned resistance. So we've seen that movement, we've seen that break, and we've seen a failure to go above $10,000 yet again, which means until we actually see a solid closure and a breakout above the $10,000 region, we cannot focus on that upside movement yet. And I've seen loads of people on Twitter right now going crazy saying, you know, 15, 16K next. And I do truly believe we'll be there in a matter of weeks or months, but we need to focus on breaking certain levels first. The same way we say a bull run will not commence until a certain level is broken, the exact same theory applies now. So we've seen that closure below, looking at a very simple and clean trend line retest over here, guys. Just put your focus on the prior high that's been broken, which means anywhere from this zone, we saw a bit of activity up here, but there's way more activity just lower around $8,400, which leads me to believe on a simple Fibonacci layer as well, just drawing that from there to there, you can see we've got the 61.8 in line with our zone over here, and then we've also got the $8,000 region here. So before anything even happens, if you are looking at short opportunities, or if you did enter short off the specific level I've given, you've got a nice movement here from the overall short zone was this region here around 9,006. You're looking at a nice movement of over $1,000 off that simple trade alone. It's looking good, it's looking great, and XRP in a second is going to paint this picture a little clearer, but I hope you guys can at least see now what I mean by lower lows forming and lower highs forming as well. Although all of this is going on right now, we are still technically moving very, very slow. And what I can start doing from here is marking this up, and as you can see right now, trend line broken, all of that movement. We're currently at $9,000, but we saw an extra push by $1,500, yet we are still holding on this exact trend line. And zooming this down over to this region over here, we're still within that boundary of breaking and moving lower. The overall trend is still bearish, which means you have to be careful, because when we actually zoom out of this, again using this Fibonacci as a very clear indicator of what's going on, going back to that weekly time frame over here, this for me just paints the craziest picture. And the reason I haven't entered short on BTC just yet is because of the size of this wick and the trend line that's very present over here. What this essentially means is, guys, now that we see this weekly candle closure, which by tomorrow evening, Sunday or Monday 1 AM if you are over here in the UK, if we see a candle closure below this zone, I basically believe what will be happening from here onwards is a push higher. An extra little wick fish. Again, we're below the 61.8 and we're below the 78.6. There cannot get any more confluences than that. You've got major trend lines. You've got a break of support, term resistance. You've got lower lows, lower highs. You've got a Fibonacci confluencing with the trend line and the overall key level. We have not even wiped out this move over here. We haven't even wiped out the high. So until we actually start breaking through these wicks here and the 78.6 Fibonacci, there is no real risk of an upside breakout just yet. And we cannot even see how any upside could form if we're still in an overall bearish momentum market. As you can see, clear sign, huge wick, just be careful. You see it push up to this level again, we will be shorting the living daylight out of this market. So just be patient, wait for this level to come through as well, because it's critical and it's just been broken. All we could be seeing now from a 4-hour perspective is, if you want a long opportunity as well, give you guys a nice long opportunity on that potential trend line break. Looking at this coming through, let's just say the trend line's over here, you come back down to this level and we tap this trend line. It will be an excellent long opportunity for a short-term long opportunity. I'm not talking breaking out to all-time highs. I'm talking about an opportunity where if you use this prior high, and let's just say this region approximately here, we could be looking at pullbacks all the way up to $9,500, up to $10,000. So that means sit now, be patient, wait for this to come through. If we see a rejection and a hold of this line, you can start going long and you can get a very nice intraday long opportunity. Let's say you enter here, targeting back up to 10K, nice and tight stop loss below the overall price action. You're looking at a 5 to 0.2 risk to reward of this specific setup alone. Now, not being rude or anything, not being funny, but that risk to reward is crazy and not many people can achieve that. So if we see this come through, we have a great opportunity on our hands, and then from there onwards we can then catch the short all the way back down. So I am looking at shorts on this overall, again looking at how this manipulation is going on. Just be ready to strike when possible. Now what we'll do is as well is just cover the possibility of an overall upside breakout. There is no real bullish momentum for me and no consideration until we see one of the other fulfilled. This is looking overall bearish. Now marking out head and shoulders, very simple stuff. Not many people will tell you this stuff because they just want to scream bullish, bullish, bullish to entice you in. But we need to be realistic and cover all sides of the market. And that's why when all of these levels were coming through, if you've been following me, guys, we called the $20,000 reversal as well. And there's not much secret to this. We just have to be patient and we have to realize that we need to have our own thoughts. We need to be in line with our own analysis. And when you look at the overall picture, you can catch a lot of these movements. So putting this into perspective and looking at these correlations with the Fibonacci's of 6,000 on the extension and the potential region of the trend line over here, what could be happening in this final movement and what I'm anticipating before we start breaking out very soon is a final push down to this region or this region before we break out. Now, once we break out, if we fall down to this region first, and we see the drop first before the overall breakout, that means no matter where we break out from, it doesn't need to be a certain resistance level. If we see this pullback first and we hit the trend line of $6,000, any breakout, it could be from this exact level here, it does not matter. All we'll be waiting for upon a breakout of this trend line, upon a downside movement first, is a retest. Once we see a retest, that will very likely be $6,000 to be honest with you, pushing down to this region here. You will then see that breakout and continuation to the upside. I'm going to show you this with a bit more clarity. So all I would do in this scenario is go from the very low to the very high. Now, what do we get when we see this all line up? Now, there's a lot of Fibonacci's, a bit of Fibception going on. Now, let's do this, and I'll show you exactly what I mean. Let's just say all of this is broken, all of this is looking good. Now, you can use this Fibonacci from there to there to align with the initial longer-term Fibonacci. Now, is there a coincidence that at $16,500, we have a Fibonacci extension on a weekly time frame? Is it a coincidence that we've just reversed from the 61.8 with a huge upside movement, but we haven't actually touched this region precisely? Is it also a coincidence that the 78.6 aligns with every single other level that is corresponding with what could be the final movement? This is what I'm preparing for, and this is why I'm telling you guys we have to get excited once we actually see that movement first. And the best way to explain this is if we do not see the downside movement first and we do start breaking out from this level, then we will be looking to go long upon a breakout of around $10,500 to $11,000. Now, once you see that level break, yet again, just like before, we're looking at pullbacks. We're looking at pullbacks of crucial regions and retesting. Again, Tom Eric Lund, it's insane how Fibonacci works, always hits 9 out of 10 times, same in Forex and stocks. Now, I'm going to agree to disagree. It can be a little bit different on Forex, to be honest with you. It's a lot easier when it comes to Forex, but when it comes to crypto, there has to be a bit more of an implementation and a bit more of a strategy around it. To be honest with you, There are times it doesn't even work wick to wick. There are times where I have to do the Fibonacci body to body. There are times when the Fibonacci has to be wick to body or body to wick. There are so many different scenarios going on when it comes to cryptocurrency Fibonacci layouts, which means you have to use other factors and external factors to piece together all of the puzzle. So looking at this overall, guys, crucial level $10,000 up to 11,000. We know with this level being broken and being rejected, it could cause a very strong reversal. But with the significance of this level, if this does break higher, then we need to be looking at this retest here, because the minute this trend line breaks and we retest, this is what is going to be going on, and this is what I will be doing. Remember, regardless of what I'm showing you right now, I've been buying crypto around these regions. My portfolio, my physical portfolio, is very well hedged. It's very well hedged for what is coming moving forward. Now, someone just said, why am I not using the Brave browser? Simply for compatibility for this live stream. Now, as you guys know, I use Brave 24/7. It's my favorite browser. I will never go back. But for the purpose of this live, I just wanted to use Chrome because it causes less faults, and the Brave Shield can cause some issues here and there. But going back to this overall longer term perspective, guys, just want to put this into the picture for all of you. No matter what these margin trades are doing, if you're buying crypto over here, it's a no-brainer, because when you're catching short trades, and let's just say a short trade doesn't work out in your favor and you do see a bull run, I've already bought the majority of my cryptocurrencies at potentially the lowest price of the year before we actually start breaking higher. That means no matter what XRP does from this point moving forward, I've been accumulating all of my cryptocurrencies around this region. So if I'm to enter this short now, which I'm currently in, and let's say the short goes completely against me and we see a parabolic bull run all the way up to $5, that means if my trade gets stopped out in a simple loss of 1 to 2% risk of my overall account size, because I'll never really breach that figure, maybe pushing 3%, let's just say my account size, let's just say the trade gets wiped out, 1 to 2% loss. I've been buying crypto over here, so with that 1 to 2% loss that's occurred, from this movement up to this movement here, I've made 100% off that return on investment anyway. So I'm hedging my potential short trades, and I'm only using the short trades to actually make as much money as possible during this current bearish cycle. That means although I'm currently buying cryptocurrency, or although I'm continuously buying the physical crypto, every time a short position comes through, my physical crypto is losing value, which means crypto is now cheaper to buy. So all I'll do is I'll take the fiat profits of my short trade, and then I'll dollar cost average into the physical crypto again. If the market's going down, you obviously want to buy more, but why not leverage that even further by shorting the market, making even more money, which obviously isn't going to be devalued because it's valued in fiat, and then you put that fiat and that fresh capital into the market, and you're dollar cost averaging with money that doesn't even need to come out of your bank account. You are using your trading skills and the margin trading to accumulate an even bigger cryptocurrency portfolio. It's one of the best ways to do this. So putting that into perspective, if we do see something like this come through, simple stop loss below around the likes of 7,300, it will be a very large swing trade. Depending on where this actually comes through, it doesn't matter how it will be. All I know is when we break through from this trend line, I'll be looking at the retest and I'll be buying. But using this scenario here, and this very exact scenario, again, simple risk reward right now, not looking too good, is it? We've got around a, well, 2,300 pip stop loss actually on that one. Sorry about that. It's 2,300 pips over there. As you can see, that's of course $2,300. Now, BTC, many of you asked me about pips. $1 movement on BTC is the equivalent of 1 pip. So if you're margin trading, $100 on BTC in movement is 100 pips. So you're looking at a 2,300 pip stop loss for a potential going all the way up even to $16,000 for a 7,000 pip movement. Now imagine that in margin trading aspects. You're capturing 7,000 pips off a single movement, which is known to happen upon a breakout to an upside breakout, and in these scenarios when a key level of resistance or support is broken and the market moves in a very large magnitude. You can see this movement here from $10,000 down to $8,000. That's 2,000 pips in a single week, and to be honest with you, that movement happened in a matter of days. So in a matter of days, you can have 2,000 pips achieved just like that. Waiting several days later, or actually a month later to be fair with you, you've got another 2,000 pips every single month. Even if you were to capture, and this is what I love about crypto, if you were to just be patient and just capture even one trade every single month, you can capture a 2,000 pip trade. And in the likes of the Forex market, where sometimes you can only have 100 or 200 pip week, or you can sometimes only have a week where you only get 500 pips on a good week, and you may have to do 2 or 3 trades or hold a very long swing trade. You can actually just be patient, identify key levels in the market, for Bitcoin and XRP in particular, catch one single breakout and you've almost quadrupled what you could do in the Forex market in a single day or two. So this is how I always look at it. And this is why you'll notice in the Telegram, I'm never rushing to execute trades. I'm never rushing to jump in. I wait for a very specific moment, and that's how I manage to minimize risk and minimize losses as much as possible. And that's why when it does come to losses as well, a simple 1 to 2% risk, I do not mind, because the trades that I capture over a yearly perspective and from an annual perspective, I'm essentially making thousands of % return on investment and only losing 1 to 2% on every single trade setup. So when you look at it from that perspective, you never truly lose if you focus on taking less trades with higher quality. The same as anything. If you go to a restaurant, which is a lot higher quality than normal, it may be more expensive, but if you go every now and then, it's going to be a lot more rewarding than going McDonald's every single day. I'd much rather go to one nice restaurant twice a week or twice a month than go to McDonald's every single day, to be honest with you. And I could take that same theory and analogy into the markets as well. So with all of that being said and done, with all of this BTC movement that happened yesterday, now that we do go over to XRP and go over to a monthly perspective, there are certain key levels we need to allocate before this live stream starts ending in a matter of 23 minutes now, to be honest with you. It's getting close. So let's get there and start understanding what's going on. Now, when it comes to a bullish breakout, the first thing we need to look at is this trend line here. Now, there's many ways to draw this, there's many ways to do this, but overall, you get the gist. We are seeing a descending slope, which once broken out from, alongside broken from the 30 cents region, this would provide a huge explosion. Now, when I say a huge explosion, I mean, no matter what we see from a BTC and XRP breakout, once we start seeing these regions being broken out from, the same goes for Ether. If I go to the Ether monthly or the Ether weekly, you can see overall there is a huge movement going on here. We are literally at breaking points of this. Break this out, maybe see a retest, boom, Ether starts flying. LTC, again, looking like one of the best ones out there right now. Just doing a very quick analysis on this. You can see the head and shoulders, the shoulders, the head, the shoulders. You've got a nice formation. This is very likely as well. I can just say this off the bat. I have a feeling it's going to be a 61.8% retracement, and it isn't. It's 78.6. Close enough. We still have a Fibonacci retracement there. Even better, it being the 78.6. Now, going back to the Fibonacci aspects as well for cryptocurrency, I do not use the 0.286 and I do not use the 0.5, the 50% retracement. Those are better suited for the likes of stocks and Forex. But when it comes to crypto, it's better to focus on the 61.8 and the 78.6 because they have a slightly larger extension to them. And this is exactly what's going on. MDD, did I say XRP shorts are active? They absolutely are, but I am also just giving you a different perspective for when we break out as well. And then I'll get over to the XRP short in a second as well. So looking at all of this, we've got a 78.6 retracement, head and shoulders, crucial region. We broke out from this level and we've never retested after actually breaking out. It was prior support, now turned resistance, boom, now support. 78.6 overall long-term targets. Guys, Litecoin very easily upon the next upside breakout. Looking at the trend lines that are formulating over here as well, using any of these as an example. If you want to even use the weekly looks more promising because it's so steep. And if this actually breaks, which it's currently threatening to do, LTC could be one of the first ones to actually kickstart a breakout for the altcoins, which sounds surprising. It's not normally one of the others, but look at this. Indecision, rejecting this support. Shoulders again, head, shoulders. It's looking amazing. Breakout of this level. Maybe this is what will actually cause the downside push. If we do see the BTC drop down to 6K, we see the XRP drop. If BTC drops to $6,000, we are going to see XRP fall down to 20 and 15 cents. I believe when BTC peaks at $6,000, XRP will push down to 15 cents. So let me just whip up one of these as well and start getting through this very quickly. Monthly analysis. What's the first thing to do? Look at the crucial level, the most important level XRP has ever seen. Crucial region of resistance. We broke through. Where is the first region of support we actually truly found upon the reversal from the 2017 bull run? When January 2018 kicked in, we went all the way up to $3.3, as you can see up there. We came all the way back down and landed exactly where we initially broke out from. One of the most crucial setbacks of XRP became the most crucial floor and crucial level of support. You've seen we've never broken through this level ever since being here. Yet, if you guys were following me, you would have captured this initial breakout. This was a shock to many people, and anything even under $1 for XRP. Who just said that? That was Matt Keenan. I couldn't agree more. It's an absolute steal. you would not be in the right mind state if you are not buying around these regions, no matter what these margin trades are doing. Buying here, look at this breakout of the confluence. You've got a double confluence of 30 cents and a trend line. If this breaks and boom, and then boom, we are going to see extraordinary growth. Now, everyone keeps asking me, where do you see XRP being in the future? Now, I'm not going to give a very specific level. All I know is I'm not selling my holdings until I at least see $10. I will not be selling even a portion until I start seeing 10. Should the market volatility change? Again, we cannot say until we actually see the breakout. And that's why it's not really necessary right now, guys, to be focusing on long-term targets or when to sell. Because you know, as 2017 proved, when the actual point in time comes where the market may be changing, then you may actually have a very different ideology of what goes on in the movement. So again, we've got around 20 minutes left on this as well. Guys, the demo is coming very soon in around 20 minutes. So just be prepared, just be ready for what's coming forward. And I just want to say, in 20 minutes time, once I go off this live, I need you guys to be prepared by all means necessary. I need you to get ready for the demo going live of the Wizard platform with 20 minutes left. Just be prepared and just be ready. We are going to strike and you are going to be in for a very big surprise. 10 p.m. Just be ready. We are going to rumble. So getting back to this as well, 666. Just reading some comments as well. Sorry, I got a bit confused there. I was just reading through what you guys were saying, just checking everyone's good, everyone's up to date, and everyone's understanding what's going on. And if you are ready, Arian, then so am I, because you are in for a treat. And I just cannot wait for you guys to just run wild on that platform and go and explore at your own free will. So back to this as well. Here is why the bearish bias for me is also still intact. So considering the cruciality of this level, we've broken through, we're now rejecting as resistance, which means this level is no longer as significant as we once presumed. And that means all of the bulls that were trying to buy around this region, they've inevitably been pushed below this critical level, where there was once so many buy orders set at this region that price could fail to break through. The fact we've now broken through shows the bears have easily dominated what the bulls once were trying to achieve. So putting that into perspective and looking at this monthly over here, we've broken through. Nice little rejection here. Still haven't seen a closure below the prior wicks as well, which is a very promising sign. But looking at this 3-pin pattern, it shows a very bullish rejection. But 3 candles in a row. We're still going lower, remember? Lower lows and lower highs. We have not actually seen a higher high or a higher low yet, because even this movement here has formed a new lower low, as you can see. From a longer term scale, by all means necessary, again, just like BTC, we are still making those higher movements. From a longer term perspective, even if we see 15 cents, let's just mark this out to where 15 cents would potentially be. It's still forming a huge movement. As you can see, even if it's 20 cents, dragging it up to there, we're still closing the year above what the prior year was doing. So having a look at all of this, no matter what happens, even if we see this drop lower, it's not negative for the market, because on an annual basis, it's just progressively getting higher and higher and higher. Even if every year we saw a movement like this, a pullback, and then for the next 3 years we blow up to $15 or $20, then pull all the way back down here, you're still progressing and going higher and higher. And this is how I've always treated my other investments, like the stock market. When you look at it from this perspective, and when you look at it from a longer term view, all of this mess on the intraday level, and when you go onto crypto Twitter, going on crypto Twitter right now, there's all kinds of craziness going on. And looking at XRP, it's now looking even more promising to see the wick fishing coming through as well. So let's start covering this quickly on a weekly perspective as well. Guys, have a look at this. We've broken through support. The first region of interest that came through, just like BTC with that huge wick, it was bound to be refilled once again. And that's exactly what we're seeing right now. The prior wick over here was not a sufficient or valid pullback in my opinion. And we needed to see a bit more price action going on around this level. So now we've actually seen this price action come through and we've seen this level be rejected. What we need to do from here onwards is be patient, because looking at how this level is holding so strong and so well, it's a bit of a threatening sign that we may be seeing some form of further downside movement. Now, putting this into perspective, 78.6 approximately, 61.8 has been broken, but the 78.6 is holding incredibly well. It's also aligning with our 30-cent zone, which means we're breaking lower and technically just forming lower lows. And that means if we do see that final shift to the downside, we can start forming a potential trend line in advance. Looking at 20 cents with the 18.5 cents extension as well. And you've also got 0.147, which means the 15 cents region is a very critical level, because it could be the final calling point before this thing absolutely blows to the moon. And I hope I'm showing you guys a whole different perspective to what the majority of people are showing you right now. Because if you actually look at what's going on this perspective, it's showing you that no matter what happens, even if we do go to the downside, it's looking like no matter what, there is going to be a huge upside explosion. So before we just finalize on this trade update as well, I just want to say within the next 10 minutes or so, we're finishing at 9:30 p.m. From there onwards, and in the next 10 minutes, I'll be doing a short Q&A as well until 9:30 p.m. So from now onwards, let me just quickly cover this trade and we'll do a Q&A from now. We're going to be, talking about everything you guys want to do. I'll be picking the best ones. So please, in those comments, get firing away now, guys, as I start preparing this quick XRP analysis to finalize. Get those questions fired away and let's get this kick started. It's going to be a crazy evening. I cannot wait to see how this all unfolds. So whilst you guys are firing away some questions, I'll just show you this as well. 78.6, look at the precision on this level. My God, it's absolutely crazy. Looking pretty good, looking very, very good indeed. Now that we've broken through this level, we've caught the initial region here. I did say there would be a potential attempt to see some wick fishing back up here again. Now, because we've broken, this trend line isn't really valid anyway, to be honest with you, because it's not too precise on the intraday time frames. It's not looking too good. But looking at this overall, rejections, 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 lower highs, lower highs, lower highs. The latest low was also a lower low. This does not count. So we are overall looking at this grand scheme of things. And what's kept me within this trade is by focusing on this daily perspective. And you can see we broke the counter trend line. We've come all the way back up to reject this level. We've now tested this on the 78.6, we've got the Fibonacci extensions down here. This is looking very favorable. Stop losses are placed around the 34 cents region just to keep it nice and safe, providing a bit of room for this pair in particular. And as long as we remain below this region, we have a very nice risk to reward setup on our hands as well. The only thing I'm doing right now is just being cautious. If we start seeing a breakout to the downside and we start dropping down to the likes of 24 to 22 cents, stops will be in profit straight away. We cannot take any risks with this market right now. No matter how many shorts we're doing, you need to be cautious and still focus on the potentiality of the market just blowing to the upside. So we're prepared for either way. Now, let's get to the Q&A. Guys, keep firing those questions away. I want to have a little look at what you all are saying, and then I can get through these questions. So let's start going through. Wizard mobile app. Good question, good question. Good question. Don't know if I'll answer it yet, but it's a very good question. But I'm sure you guys may already know the answer to that one. Membership price. Now, I understand there's going to be a lot of questions regarding the price on the platform, and that will be revealed very, very soon. We cannot reveal that just yet. We're working on a few more things, but as you've probably already seen, guys, on Twitter, we have already given the price away. Now, if you have gone onto the Twitter profile, if you are following us, and if you're not following us, make sure you already are, because a lot of leaks and teasers are going to be spread across the social media platforms. That means you need post notifications on for every single leak that's coming forward, because we have 5 days left, guys, and we are going to be revealing absolutely everything, which means whether that's YouTube, Twitter, Instagram, whatever it may be, I need you guys with post notifications on, because I'm going to be firing away surprises left, right, center. The Wizard team have so much up their sleeve. You need to be the first one there. The same goes for the demo at the end of this webinar. If you are not there on the ball, if you are not there ready, the platform will self-implode and you will miss out. And there's going to be a lot more surprises like that coming forward as well. So if you actually want to see the true price and you want to see a little bit of a teaser on that price, make sure you go down to the tweet and have a little bit of a research on this. But for now, let's get through to the next questions. Let's see what we should be answering, and let's see what you guys have got in store for us. So bear with me a second, guys. I'll go through your questions. Let's have a little look. Can we watch this again? Yes, we will be recording this as well. You can watch this after to ensure you get the full analysis as well. Again, guys, it's actually to give you a head start. I want you copying all of my levels on this as well. I want you doing absolutely everything. So let's just have a little look at this and go through some of these questions quickly. Right, let's go through. And guys, just to say as well, at 10 p.m, I need you guys to be ready on Twitter for the official link and Telegram. So once this webinar actually ends, I know you're asking me where you're going to get access to the demo. Pay attention on Twitter. This is what I'm saying. You need to be subscribed. You need to have those notifications ready, because at 10 p.m, the link will be posted on Twitter and Telegram. So if you want a head start and you want to actually explore this platform, it's there at arm's grace within that Telegram. So let's have a look at some other questions. Lived in UK my whole life. I was actually born in an area called Tolworth. That's near Kingston Surbiton, for any of you that do not know. And now I live in central London, so I have always lived in the UK and technically the border of Surrey, South London, my whole life. Not many people know about Tolworth, but it's a very interesting area. Glad to, not be there anymore. Now, let's have a little look. What do I see for XLM? Now, the thing is with XLM, guys, there's a lot of questions regarding XLM. And, because it's actually competing with XRP, does that mean I do not see value in it? Does that mean I do not understand what the company and the projects are striving for? Absolutely not. I do believe any form of competitor and any form of competition is good within this market. That means no matter what is going on, if Bitcoin has a competitor but you love Bitcoin, you should not hate its competitor, because competition is what drives the growth. It's what's going to actually drive the adoption for this market. The more there is competition, the more pressure it applies for these projects to step up their game. Tron, not going to get into Tron. Everyone knows my opinions on Tron. Justin Sun, I do not agree with his methods of marketing, and I do not agree with his methods of anything, really, to be honest with you. We've got a few people in Holyfield in the building as well. Same secondary school. Very nice to see. Very nice to see. Holyfield was a great place. Very interesting. But going back to XLM, guys, to be honest with you, if you like Ripple, you should also like XLM. No matter what happens, they are both striving for the same projects. They are both striving for the same goal. And that means even if they are bringing some form of awareness to the market, we have to appreciate that, and we have to appreciate what they are standing for and what they are striving for. They are doing everything in their power to drive this industry forward. And to be honest with you, the payment sector is one of the largest industries in the world. It's a multi-trillion-dollar sector. The forex market trades at almost over 7 trillion a single day. So that means, how could we ignore one of the most important sectors in the world? One thing that I've actually been thinking about, a good little Q&A answer for you here, is the whole purpose of cryptocurrency is actually almost a control mechanism by banks and governments. I believe that having everything on the blockchain is going to mean full transparency. The purpose of blockchain is transparency, which means, am I still with my girlfriend? Yes, I am. I am still with my girlfriend. Platform comes first, but I am still with that girl as well. Do not worry. But going forward, BTC, crypto overall, privacy, security, taxes. When you think about blockchain, you think about transparency, you think about how everything can be done at the click of a finger, Ethereum smart contracts, ERC20 tokens, everything. It's crazy. When you actually think about what's going on, guys, Bitcoin could become a mechanism and a means by governments and banks to actually control us and actually monitor all of our taxes. All of these things are coming into my head, which means any form of project that's focusing on, let's just say, governments, banks, payments, all of that stuff all together, they are a good opportunity to go for. Now, there's going to be a little competition as well. I might as well just throw this out there just before I get to the next question. It's giveaway time, and that means at 10 p.m. on Twitter, there will be a giveaway. So make sure you're looking out for that as well. I promised you, no matter what happens throughout this webinar, we're going to be throwing in surprises, even if we're short for time. So that means make sure you are ready. Giveaways and whatever is going on from there onwards. For all you know, there could be some free memberships on the card, so I'd pay special attention to Twitter and Telegram as well right now. So let's go over to the next question. Let's see what we've got over here. Mr. Sean Smith with the hashtag edamame coin, edamame bean. I'd love to make an edamame coin one day, as I'm a big fan of spicy edamame. Shout out. Novikov. How did you cash your pension in? Not a decent question, but I could answer that if you want. Daily calls on the platform. Now, in regards to the platform, first of all, daily calls, absolutely. The same way you are seeing what you are seeing now in this Telegram, whether that's video analysis, news, whether that's intraday, day trades. When we're actually on the platform itself, not to mention all of the other features where I'll be interacting with every single other wizard, we are going to be going a lot more aggressive in terms of analysis, in terms of trades, everything that's been going out there. You're going to be getting long-term projections for long-term investments. The biggest misconception with this course, and I need to clear this up right now, everyone keeps saying, is this a day trading course? What is this? Is this about scalping? No. I'll be honest, in the beginning, it originally was going to be just a day trading course. That was the exact purpose of the course. But what's happened now is we've shifted that. It's not about day trading anymore. It's a life course. In my opinion, this is purely about life. This is about elevating yourself on every single level possible, whether that means, psychological, philosophical advice, there's investment advice, there's investment strategies, there's even life advice on how to carry yourself, on how to actually get on top of your whole game. This goes far beyond trading, because at the end of the day, if you're not in control of your own mindset and if you're not in control of your own body, then the whole psychological aspect, which takes up almost the entirety of trading, is going to be impacted, which means I need to be getting you guys on track physically and mentally before you can actually be prepared to take on the charts. Now, what a better way to do this than by making you an all-rounded money-making machine. So next question, what do I think about the overall economy? Good one to catch on right now. Quickly answer that as well. The economy, absolute shambles. We know that there is a recession on the cards. We know that the Fed are injecting capital into the economy like no tomorrow. I'm very jealous of the people that work at the Federal Reserve, because I'd absolutely love to be one of those characters, one of those employees that just print $100 bills all day, and that would be a great job. Maybe one day in the future they'll hire us for all the predictions that we've given and for all the calls. But the economy overall, to be honest with you, recession is most definitely on the cards right now. I can see a lot of mess coming forward, and I've said this for almost 2 years now, especially for over a year and a half ago. If you've been following me on Instagram, you would know that I said 2020 would spark the initial phases of the next economic crisis, the next financial crisis, the next recession. It's all on the cards right now. The signs are all around us. The S&P actually reversed exactly from the region that was given almost a year and a half ago. We had to wait months and months and months for that level to come through, and it came through. We've seen the reversal, and we are slowly seeing the demise of the stock market. So what do I think is going to happen with the recession? Put it this way, I believe the stock market will fall 50 to 60% during this next recession phase. That should be over the period of 3 to 5 years, but I do believe we will be seeing a very sharp 50 to 60% correction over the entire stock market as a collective. And what does that mean? Where is cryptocurrency right now? We're looking at cryptocurrency. If we get this chart up as well, to put that in perspective, let's go to the monthly yet again. Let's have a look at where Ripple is right now. Just using Ripple as an example because it's so low. Let's just completely clean this chart out 1 second as well, and just show you exactly what I mean by this. Look at where XRP is right now. And then let's go over to the XP, I think it's SP, there we go. S&P 500, only available on there for now, so let's just leave that for now. The S&P, guys, essentially is at the very top and at the very highs, whilst crypto is at its very lows. Now, with a recession on the cards, let's just put 2 and 2 together. If the whole economy is looking to absolutely crumble and cryptocurrency is at its all-time lows, but yet the stock market's been on a rally for 9 years. Again, it's not a crypto bull run for 9 years, it's very steady organic growth. But when you put that in perspective of where the market is right now for crypto and where stock market is heavily overbought whilst we're heavily oversold, it's an inverse correlation, and it looks to me like we are going to be seeing some form of party kickstarting very soon in that market as well. Now, how would you play that stock market recession? How would I prepare for it? Dollar cost averaging. The same way throughout the entirety of 2018, where the market was crumbling, I was buying more. I was taking my profits from my 2016, 2017 investments. Not even 2016, I'm forgetting that I was even holding this stuff since 2012, 2013. So the majority of my investments from around 2016, 2017, I was liquidating them out of the crypto market during the peak of the bull run, and as we started shifting into 2018. The same thing I would be doing exactly for the stock market crash. I hold a lot of money in funds. I have a lot of majority in mutual funds, ISAs. I've been heavily prepared for that for a while. But what I'll be slowly doing, and what I've done recently, is actually liquidated the majority of my stock market holdings. And I'm looking to dollar cost average as the next recession kicks in, taking all the profits made from the initial movement and then slowly shifting this over to the new market once it falls lower. So on that note as well, let's have a look at some more questions. Let's see what else is in store. What else have you guys got for me? Let's have a little look. Let's see, any more questions? Can't wait for the demo, 10 p.m. Yep, guys, 6 minutes left. 6 minutes left. So let's just get a few questions out here. GNT, very good question. Keep them coming, guys. Loads of questions firing through. Book, please, Torre. Book. We have books in that platform, I can tell you that. If you're looking for books, a good topic as well actually to cover is books. Before I get into the likes of GNT as well, this is a question I get asked all the time. My goodness, there's a lot of comments coming through right now, guys. I'm absolutely loving it. Keep them flying through. Before we get into that, for the last 5 minutes, books, a great topic to cover. Keep them questions coming, because if I can answer, I will definitely answer. A lot of ARK questions. ARK, still holding ARC, still holding GNT, still holding Dragon, still holding Syscoin, still holding ZRX. We are holding the entire package that I've gathered. Oh my goodness, we've got 5 minutes left, guys. Keep them coming. Right, so all of those, I am holding them. Yes, I am. But books, one of the final questions to answer. How do I feel about books? What do I feel about trading books? Well, to be honest with you, trading books the way they are, and do they actually make a real significant difference? Not really, because when it comes to trading, there is nothing that beats the real life experience. There is nothing that a book can teach you that real life experience cannot. And it's so important that no matter how many books I read, and no matter how many books I used to read, it doesn't make a difference until I'm actually trading live. No matter what you can learn psychologically, no matter what you've actually prepared yourself in a book, nothing prepares you for the real thing. So never fall into that trap that, you know, a book will be the one that changes your life, because when it comes to philosophical or psychological books, they have a direct correlation with your trading. So when it comes to trading, what's funny is it's not the trading books that help you, but actually the philosophical and psychological books. They are the ones that shift you. They are the ones that give you that psychological control that you need to dominate the market. So when it comes to books, to be honest with you, I stick to the books that talk about business and psychology and life and all of those philosophical topics, because they directly correlate with my trading anyway. Books that teach you technical analysis and strategies, yes, it may make you aware of them, but does it really prepare you? And the market moves, the market's dynamic. So you may learn about a head and shoulders, you may learn about a bearish engulfing, bullish engulfing, but when it comes to the real deal and your real money's on the line, that can change entirely. And to kind of continue on that note, to make things a bit easier for your questions before we get further, if we do have time for more, I just wanted to say as well, and just throw out there, that once you have access to the Wizard platform demo, if you are quick enough to have catch it, of course, I want you guys to take a little visit over to the course page, because what will happen is on chapter 1, lesson 1, the first lesson will be available on the demo of the Wizard platform for you guys to see as well. Now, this is just a teaser, this is an animation form, and this is just a very small speck, a very small crumb of the entire loaf of bread that is within the Wizard platform. That was a great analogy. Very proud of myself for that one. A speck of crumb on a loaf of bread. Very, very happy with that result, and hope you guys like that too. So just wanted to cover as well, whilst we are looking at through some questions, again, GNT, all those things, guys, if it holds true value, I am holding that cryptocurrency. If they have a working product, if they're actually progressing through that beta phase, I will be holding that crypto by all means necessary. I do not care for all that rubbish and malarkey talking about a strong team. Is the team proving themselves? What is a strong team if they're not proving themselves? All you need to look at is if the public and the governments, the banks, if there is a large demographic of people that are actually testing, utilizing, investing, or showing interest in that product, it's a suitable investment to make. And GNT, cloud computing, my goodness, the amount of video edits that we do in-house, the amount of video edits that go on in Hollywood, GNT is going to be breaking through that barrier and actually helping people achieve that goal as well. So that's enough of the questions for now, guys. We have 2 minutes left before I go offline, and you guys are about to get the treat of your lives. It feels very refreshing. 8 months of work the Wizard team have put into this, blood, sweat and tears. Many of us in this team over here in this office right now, we have not slept, because we are striving to achieve this goal and give you everything we've promised you. And again, we've followed that principle very similarly. We've decided to under promise and over deliver. We've kept our cards close to our chest for almost an entire year now. So guys, it's time for you to go out there, get prepared, make sure you're on Twitter, make sure you're on Telegram right now, because in a matter of seconds, minutes, it's going to be at complete random. You are going to get hit with that link, and if you are not striking ASAP, you will not be able to achieve this. So guys, Twitter, Telegram, get ready.